Hello guys, welcome to my channel Market Bender. Hope you are well. So we are back again with our weekend analysis for crude oil and natural gas. So let's begin. So we are diving into the latest data on crude oil and natural gas, examining inventory levels, economic indicators and price forecast. So let's start with crude oil. So the latest US crude oil inventory report that was released on February 5th showed a massive surprise. Instead of a forecasted 2.4 million barrel increase, we saw an actual increase of 8.664 million barrels. That's a huge beat, suggesting significantly higher than expected production. And this surge could also be contributed to several factors, including increased drilling activity or perhaps even a slowdown in refinery runs. Now, moving on to natural gas inventory. Now, the US natural gas inventory report released on February 6th revealed a withdrawal of 174 billion cubic feet, slightly higher than the forecast. However, this withdrawal was significantly smaller than the previous week. And the primary driver for natural gas prices right now is the weather. Warmer than average temperature across much of the US have drastically reduced heating demand, and this has led to lower consumption across residential and commercial and even industrial sectors. Increased production and reduced Canadian imports further contribute to the bearish sentiment. Now, moving on to the economic indicators. So, the US manufacturing PMI data showed expansion at 51.2, exceeding forecast and suggesting growth in the sector. This is a positive sign for the overall economy. However, the services data actually, is not that good. It shows it has a slowdown. And if you compare this data China, you will also see that the China's manufacturing PMI data contracted, which basically is raising concerns around global economic health. And these mixed signals, they add complexity to the energy market outlook. So the China Kexin Services PMI data, the actual PMI data was less than the forecast, which shows a decline, and it remains to be seen, how the sector will perform in coming months and what measures, if any, policymakers are going to take to address this situation. Now, if you talk about crude oil price expectation next week, crude oil prices are under pressure at the moment because of the various events that are happening around. Primary reason, US China trade was basically, it is raising concerns about slowdown in global economic demand, global oil demand. And then additionally, surge in US crude inventories has exceeded expectations, and it indicates a weaker demand, and also there are some risk, further for price declines. Also, then, news about sanction on Iran could potentially reduce oil exports. Prevailing market sentiment is dominated by demand concerns, preventing crude prices from rising significantly. Despite Saudi Aramco's decision to raise crude prices for Asian buyers, it remains uncertain whether this signal genuinely resurgence in demand of if market sentiment remains too weak, or to support a sustained price increase. And that's we have also seen, in last trading session also. Price has taken support at 6200, and it basically was not able to break down support. I think it was because of these events that are happening in the market. If we talk about natural gas price expectation, there are some bearish factors, out of which warmer weather is one of the important factor. And uh, warmer than average temperature across much of the US, it has significantly reduced demand for heating, leading to substantial drop in the residential and commercial consumption. And this trend is likely to continue into next week, putting downward pressure on prices. Reduced consumption is also one of the factor. Overall natural gas consumption has fallen significantly due to warmer weather, including lower consumption of power generation in the industrial sector. This reduced demand is a strong bearish indicator. And there are some other factors also, but I think these are the major ones. If you talk about bullish factors, bearish pressure dominant, basically warm weather continues to suppress demand, driving downward pressure on natural gas prices next week. LNG exports, although remain strong, robust LNG export prime provides some price support, driven by high international demand, increased vessel departures, signal continued strength. Storage deficit persists. Despite recent withdrawals, storage levels remains below 5-year average, and it is a potential bullish factor if colder weather returns. And then international price increase, the European TTF gas price offer indirect support to US LNG exports. So there are some mixed signals also. Pipeline constraints in the Permian basin are a localized issue. Decreased rig count hints of future production declines, but current production remains consistent. Storage withdrawals align with the 5-year average, but the overall deficit persists, offering limited support due to low demand. Okay, let's move on to chart analysis for crude oil and natural gas. Okay, so moving on to crude oil analysis. So we have seen that crude oil right now is in a consolidation phase. The price is basically moving in a zone of 6200 and 6400 price range. Although it tried to break, out of this zone, but the price was not able to sustain above 6400 level. We have seen that further price corrections in the last 2 3 sessions, and price right now is taking support at 6200. So 6200 on a is a important support level. If the price breaks down this level and sustains, then the price can further go down to 6000 level. And on the longer side, if the price breaks down the resistance of 6400, then the price can further go up to 6500 level. Okay, moving on to natural gas. For natural gas, we have seen that after price correction in January, we have seen in February the price consolidating between the level of 278 and 300. So natural gas is right now taking a strong support at 278 level, and to further break down this level, it has to go and sustain the price below 278. So if you're trading natural gas, if the price breaks down 278 level, then you can put a short entry. Although right now price is at trading at 294, which means that if the price tries to break the resistance level at 300, you can put a long entry also. Next target for natural gas would be 311, and then take to profit will be at 320. Although we may see some bearish pressure in natural gas in the coming week, so please plan your entries accordingly. So that's about the weekend analysis for crude oil and natural gas. If you like my analysis video, please like and subscribe to my YouTube channel. Thank you guys and have a wonderful day ahead.